Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a breakdown of the action in today's session, where Snap dragged the Nasdaq notably lower today. So last weekend it was Target. This week it's Snap.
Yeah, when you have these big economic shifts, you can really catch everybody by surprise, including investors, including companies. A couple of stocks that are doing a little bit better than Snap, though, are Albemarle and Northrop Grumman.
All right, well, we will check in on those first. Let's talk about the major indexes today. So the Nasdaq down about 2.4%, the S&P 500 down 0.8%. We had the Russell 2000 down 1.6%, and the Dow managed to close slightly higher, up by about 0.2%. So we did close off of lows here. Looks like 11,000 for now, kind of the floor of support. So on the downside, that seems like the key area for us to try to hold here.
Yeah, I mean, so it was nice to see that we recovered somewhat, that the Dow actually turned positive. Nasdaq, I think, still had its worst close in quite a while. But yeah, the Dow moved higher. Technically, 3 straight up days, though 2 of those up days were pretty small. I guess it's above the 10-day line, which is a major achievement nowadays. It's sort of like to say that's a minimum requirement is like saying job applicants shouldn't turn in their resumes in crayon. You know, it's like it's such a minimum level here,
Yeah.
something that the Nasdaq and the S&P are struggling with. So there was a bounce back, but you know, it just clearly it's very volatile. And even though the market is sold off amid concerns about the Fed and more recently about the economy, when you get to this inflection point where the economy suddenly starts to fall down or turn up, it can be hard to catch up. I mean, we had Target, we had Walmart, we had Snap, we've had others. Some of the economic reports really surprisingly weak, including new home sales. So it's just hard to adjust for that. Like consumers and businesses are all reacting to what they're seeing, and that causes sort of a chain reaction going forward. So a lot of reasons to be nervous, even though technically we're in a rally attempt. Technically, we could have a follow-through day tomorrow.
Yeah, that thing didn't work out too great the last time, but
No, it did not.
But we shouldn't be have a chip on our shoulders because of that, because then that means we wouldn't be open-minded, and we got to stay open-minded, right, Ed?
Got to stay open-minded. I mean, I do think there's reasons in this kind of environment that if we do have a follow-through day, which we do not have one right now, but if we did, you would want to be very cautious in stepping in. You know, you don't want to ignore rallies, but you definitely want to be cautious moving in this kind of environment. A lot of reasons why you should have skepticism about any kind of rally that we have right now.
Yeah, so we're remaining cautious. There's a lot of improvements, a lot of damage that needs to be repaired here for the Nasdaq, as you said, below even short-term moving averages. All of the moving averages in downtrends here could be overhead resistance as well. That's what we talked about with David Ryan on IB Live this morning, how you really need to be looking at overhead supply when you're analyzing stocks, and at the very least, when you're applying that to individual names, you need to be focusing stocks by and large, especially from a position trade standpoint, stocks that are in uptrends, and we are seeing a couple of interesting names on that front, which we will get to. But first, let's take a quick look at the 10-year Treasury yield. So continuing its recent pullback right around the 50-day line. If we go to the weekly chart, it looks like support at the 10-week line in question. Is this significant to you, Ed, or how do you interpret what we're seeing here?
Well, obviously, we're pulling back a lot the last couple of weeks on concerns about the economy. So we have a situation where inflation is still very high, which is going to make the Fed raise rates, which might, and all other things being equal, push up interest rates. But now you're also worried about growth. So this isn't really a positive development per se. So something to be watching out for. Don't want to see that yield curve invert. But it's just reflecting what everything else we're seeing, that the economy is weakening.
hmm Well, if you want to play the broader trend of rising rates, something that we've been looking at is TBT. This tracks the 20-year yield, not quite coming down to its 10-week line yet, but if could this actually be a buying opportunity in the works here with this pullback that we should be looking out for?
It's like with gold and some other things. You're making a bet on the economy to a certain
hmm
extent, and Fed policies. There's a lot of uncertainty. So if you do it, I mean, it can definitely work. But knowing it might reverse quickly. So just be ready to step out, just like with anything else, because investors' fear to greed could shift very quickly on something like this.
hmm a great note there, Ed. All right, well, let's take a look at the stock of the day, but not in the way that you would think, but the topic of the day on Wall Street, and that is Snap with an abysmal reaction to its quarterly report, down 43% by the end of the day. So sending a shockwave across the tech landscape today.
Yeah, and again, just like I was saying earlier about when things go bad, it can go really bad very quickly. I mean, a lot of advertisers probably in the last few weeks said, you know what, we are cutting back. And it's just something it's hard to forecast. It's like all those decisions coming in. We'll see how others do. But, this had already fallen like 70% from its September peak. So it's not like investors had no idea that things were getting worse, but you can always fall 100% from wherever you buy it. And as long as it's above zero, that's something Scott St. Clair likes to say on IVD Live. And definitely the case here. So even though we've been pricing it in, we hadn't really priced it in fully. This had a really big impact on a lot of online advertisers. And obviously, all of that reflects some weaker consumer spending, is the backdrop behind that.
And Snap, like many 2020 winners, now near its coronavirus crash levels. So almost a complete round trip at this point. But for investors who did buy early in that coronavirus rally, maybe they got in late April after the early April follow through day. Maybe they waited for this first cup with handle breakout. Even if you were using a sell signal that gave you a lot of room, like a decisive break of the 40-week line, well, that was your signal to get out instead of continuing to hold this all the way back down.
Yeah, and that's the thing when we talk about it, sometimes with some stocks that still have big gains from prior years, you have to make a decision at some point. I mean, sure, once it round trips and undercuts everything, yeah, it looks obvious. Yes, you should have sold. But this is why you have to make and there's some leeway for individual investors, but you have to have some line in the sand, even with some long-term winners, big winners. Make sure you capitalize on your good bets to begin with.
Exactly. All right. Well, next on our list, let's take a look at Northrop Grumman. This is a standout stock in the defense area. So checking back in on this one is worthwhile. I have a trend line alert that was triggered today. Many of us on the team had this trend line drawn on the chart here. So a nice move for the stock by the end of the day, up 3%, clearing the trend line. Volume, it doesn't look like, I don't know if we have the final figure, but even if it wasn't above average today, it was definitely an uptick from at least the prior two sessions.
Yeah, so there's that. I mean, it wasn't the most powerful move, and it's strange to have such a strong day. I mean, obviously, this is a little bit separated from economic concerns in the way that a lot of other stocks are, and there might have been defensive flows into it. But this is the leading defense stock right now, for sure. Breaking that trend line, you could argue that from a couple of weeks ago, it broke above a short-term high. It's really only about 2%. It's less than 2% below the official buy point around 477.36, I believe. And so a lot of positives on this. RS line just keeps on hitting new highs. I mean, the growth rates aren't the most tremendous. There's reasons to believe the defense budgets are going to be increased around the world for a number of years, which should provide a benefit. But this is leading the sector. So this was added to swing trader. At this point, it's a very difficult environment to be buying anything. Let's be clear that even these stocks might come under pressure. So you can't. We've certainly seen the last week or so that safe sectors aren't necessarily safe.
Which is why it's important to manage risk, and buying a stock that you have the moving averages at a level to where if it closes below it, you're wrong. So at the close today, the stock about 4% above the 50-day moving average. So if you use a decisive close below the 50-day to say, hey, I'm wrong here, then you adjust your portfolio risk off of that. We're taking, a lot of us are, if we're trading at all, getting involved, taking nibbles, those pilot positions or flyers, as some people like to call them, not placing big bets like you would if you saw an RS line blue dot trend line breakout at the beginning of an established rally like what we saw in 2020.
Yeah, and you're definitely, I mean, obviously you always, if things turn against you, you have to get back out, but this is definitely not a time to be planting your flag and saying, I am going to stand my ground, I'm making a big bet. Definitely, if things go bad, you bounce right back out.
Mm-hmm. And you said he was added to swing trader today, but arguably position traders who wanted to put some money to work here could have initiated a position today and then followed up with if the market improves, I think, because we get asked about adding to positions. So I guess what I'm trying to say is if you initiated the early entry, adding at the proper buy point makes more sense to me than initiating at the proper buy point and then the stock is 5% out of that buy zone before you add, because at that point you're extended. And especially when the market is volatile, anything that is any sort of extended is definitely a no-go for me.
I think that's a great point. I think that's a good strategy to at least start positions that if you can find a legitimate early entry like this was.
Mm-hmm. All right. Well, we'll have to see if the market can get a little traction, or if at the very least Northrop can continue this move here. And last but not least, checking back in on Albemarle. We looked at it yesterday, but this is another stock with the RS line blue dot. Looks like we do have this 250 level as a resistance area to watch for the stock, but it's continuing to set up here.
Yeah, I mean, tremendous news after the close last night. So it was trading up 5% overnight, which again, one of the reasons why you should be very cautious about overnight trading and trading right at the open, because it looked really good at the open. Obviously, the market weighed in, but a big upward revision to earnings, second time in about 3 weeks. So the earnings estimate from Albemarle is now double what it was at the beginning of the month. So a lot of reason to be positive about this, about lithium. But yeah, that's a key area. I mean, 248, has been an area where it's hit a number of times, tried to get up over that, couldn't hold it, but still the RS line continued to rise because it's outperforming the market. And also that 248 is also sort of roughly as that line drawing all the way across, basically where it was at a prior base that did not work out. So this has a lot less overhead resistance. There's not too many people. We were talking about overhead resistance. Northrop doesn't really have much. This doesn't have too much either at this point. It's gotten above most of those levels. Still needs to get really punched through the 248, 250 area.
Mm-hmm. And this is a stock that, lumpy fundamentals, of course, but the most recent quarter, very strong. What we like to see, double-digit top and bottom line, well, triple-digit bottom line growth, strong estimates moving forward. So just some of those basic fundamental metrics are looking good. It has that commodity angle to it, but also the kind of growth tech, future of tech angle with electric vehicles as well. So it kind of checks off a lot of boxes. Not to say that this is going to lead the next leg higher, but there's a lot of compelling aspects to it.
There is, and it's like, and I'd like to say those same kind of things, and yet at the same time, this was a 42% deep base. So I mean, just because there's a great story, and this happens with a lot of other stocks that have compelling stories, a lot of them looked a lot worse, had much bigger declines, and haven't come back. So there's a lot of good reasons to like this, a lot of good reasons to like this story, but you do need to look at the charts and look at and put in the context of the market. So this is definitely something to be on the watch list. hit a little resistance today, but yeah, definitely something to
Mhm.
be looking at going forward.
Well, with that being said, Ed, maybe it seems like the best thing for the stock would be to spend a couple of weeks here and really tighten up. Not just, a couple days of tight action, but maybe a couple weeks of tight action around these levels would be
I
good.
think that'd be great. I mean, unfortunately, the market is just sort of really volatile. It seems like it's hard to do that. It's hard to do that. I mean, maybe it'll be able to do that on a weekly basis because there's some big daily
Mhm.
swings on the market. It makes it very difficult to have tight action. We are seeing some stocks do that, but yeah, that would be ideal. It'd be nice if the market could do that. Maybe go sideways
Mhm.
for a while, let more stocks sort of set up rather than race from the bottom and then look sort of extended at the moment they finally look actionable. So, uh, but this is more of a market. Those are nice scenarios that are like, we're just not a market to be thinking too much about buys.
Right.
That eventually will develop. It's very tricky right now.
Exactly. Yeah, we'll have to see what hand we're dealt. But as I saw on Twitter, the deck isn't hot right now. So
No.
we'll have to see. All right. Thank you, Ed, and thanks everyone for tuning in. We'll be back, of course, with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live for all the details on that. We'll see you there, and we'll see you right back here tomorrow.